How's everyone doing today? It's the 3rd of September. Happy Tuesday, everyone. So now we're kicking off into a new month. I did miss yesterday, I do apologize, but I am back today. And let's have a look here. So we are sitting around on the Binance BTC USD liquidation heat map on CoinGlass, and we're really balancing on this $59,000 support level. It's a real psychological level, being on the round numbers. If we're looking to the top side, there really isn't a lot of um, resistance levels of liquidity. There's a little bit at 60,400. There's a tiny bit just below 60,000 at around 60,900, and a tiny bit around 61,600. But what we're looking at here is we've got a lot of yellow, a lot of larger liquidity levels on the 24-hour heat map to the downside at 58,500 and 57,950. So let's just quickly zoom out to the 3-day, and we'll see what things are looking like in this regards. So the more we zoom out, the more we see more orders sitting in the market, which will just give us a greater depth. So early this morning, we swept the liquidity to the upside, which really took that out. We've come down, consolidated, and we have started to move again towards that upside. But we broke the 59,350 mark. And now we've come back, we've rested, and whether we move back to the upside or come down to start to sweep this liquidity around that 58,500 and below. There's an awful lot of support just below 57,000, around that 56,690. 56,690 is the sort of heavy area of liquidity to the downside. But let's move over onto our BTC USD pair. Let's talk about it. So we are looking really busy on our moves here. So in the regressive channel from the August low up until now, we are still on the buy side of the liquidity. So let's just zoom in. I know it looks a little bit busy, but in this, we are still on the blue side, which is the buy side of the liquidity level. We've come down where we broke out onto the sell side liquidity beyond 2 standard deviations. We've come down, we broke through, we retested on the buy zone, and now we've come down. We hadn't quite touched 2 standard deviations to the downside at the beginning of September, and now we've pushed up at our current price. We can see here that as of 1 hour and 38 minutes ago, we did a liquidity fail test. So we've come down in this shorter term downtrend of a regressive channel. We've broken out 2 standard deviations from the trend line. We've done a swing failure pattern where the candle has come up, grabbed liquidity, but not broken this level here. As far as higher lows and lower highs go, that is still so we've got a high, a low, a lower high, a lower low, a lower high, a lower low, and now we've come back, we've broken this lower high, but we haven't broken this top one. Now we're still, and so by not breaking that one, we are still in this downwards regressive channel trend line. So that gives me bias that while we are still on the longer term time frame from the 5th of August uptrend, we're on the buy side of the trend line. We're actually still in this downtrend until we break this protected high. Once we break this protected high, then I'm definitely looking at uptrends. and moving towards the sweep liquidity to the levels that I haven't broken here. But with this protected high, my bias is to come up, sweep liquidity from here to go down to lower prices, continue to lower prices without grabbing any more liquidity, or if we come up, we break, do a retest to move to higher prices. So they are my three levels. I definitely have a 60% bias to the downside, even though we're on this uptrend. We are on a shorter term but significant downtrend over the last 24 hours. We have been in this uptrend, which doesn't mean anything, but what this gives me bias to is that it can't just keep going up in this trajectory forever. It does have to pause, it does have to consolidate, and it usually leaks with its wicks liquidity to the opposite side to gain buy orders or sell orders to move to the other direction. So if this is going to go higher, this does have to come back to grab some liquidity so it can move up with those orders taken out of the market. So what that does is it takes buyers out of the market, it gives people a new narrative, and then with that new narrative, it can drive prices to its next intended target. And that's what the larger industry market movers do, because that's how they make their market orders filled, is by filling the liquidity that's already placed within the market. Now, let's move on to the S&P 500. So we can see here that yesterday was actually a public holiday in the US. So we have actually, even within that, from the 21st of August, we are still seeing this sideways chop. Like we're just sitting backwards and forwards. We're just up, down, up, down, up, down, up, down. So we are sort of, let's move out into the daily just to get a slightly better bias, slightly better perspective. And we can see that we are in this uptrend. So we're currently in this leg from the Japanese carry tray load from the 5th of August. Now we've come up and we've just been consolidating sideways. Now we are still trending upwards, but it's in a much slower trajectory than what is currently being displayed over a longer term time frame, which is very interesting. Just to bear in mind, you can't go up and fast forever. But as we are in this V recovery, which the move was already occurring before the actual low, people were already selling out of their stocks before that low, and now everyone's taken off to the upside. There's been quietening from last week, just a sideways action, and with yesterday was a quiet day, being the public holiday. So are we going to see a breakout to all-time highs from the previous high of the 16th of July? Now that is a question, so we're not sure. What I'm looking at is if we break out on the S&P 500, that will give me a bullish bias. That will give me a bullish bias to the upside for Bitcoin. If we see a bit of weakness, then I think we're definitely going to find ourselves moving to lower prices for Bitcoin and a lot more weakness, because Bitcoin, although it's not connected to the stock market, it's a more risk on asset. So because it's also traded 24 hours a day, 7 days a week, people can touch it and move it a lot more easier than what they have on the S&P 500, because that only trades officially through the as far as the stocks go. They only trade through the New York Stock Exchange, through their time, and through derivatives they can carry over into slightly longer times. So if we get this breakout past 55,685, if we break past there, then I'm going to start to look for longs, which gives me a bullish bias for Bitcoin, which also gives me more faith in a couple of days of movement up. Now let's move on to the DXY. So with the US dollar, we are still in this downtrend. Back. So on a daily, we've got this macro uptrend. We've got a downtrend from September 2022, so a 2-year downtrend. We are in the buy side of this downtrend, but we're also in a shorter term downtrend from April of this year. So let's just move down into the hourlies. Alright, so with this, we are seeing strength in the US dollar. So with the strength in the US dollar, as we climb to higher highs, we are looking at, as the strength in the US dollar goes up, weakness comes into the Bitcoin and the S&P 500. And so from there, that gives me a negative bias to Bitcoin until this finds a little bit of weakness to move down to lower prices. If this goes lower, Bitcoin will go higher. If this goes higher, then Bitcoin will go lower. And that gives a little bit more bias. So with the 3 charts that we're looking at, the S&P 500, the DXY, and Bitcoin, if we can see weakness in the US dollar, strength in the S&P 500, then we can have a bias that Bitcoin will generally go up, and that's where we look for our longs. If we see strength in the US dollar, weakness in the S&P 500, then that gives us a bias of a bearish case for Bitcoin. So that's where I'm sitting for today on the 3rd of September, this Tuesday. And I hope everyone has a spectacular day, and we will catch up with you tomorrow. All right, happy trading, everyone. Ciao.